Right now, I want to talk about income and work history and what you need to know when you're looking at qualifying for a home loan. My name is Drew Smith. I'm a licensed loan officer, NMLS number 2113580. I can do USDA, FHA, VA, conventional, new construction loans, and even some non-QM products like bank statement loans and things like that. So the first thing that comes up is how long, right? So when we're looking at the loan application, we're going to have you fill it out. We want your work history. We want 2 years worth of work history. So that's what we're looking at as far as how long. We're looking at the last 2 years. The next question is, has it been in the same industry? Typically, when you're looking at qualifying income, it's going to look a lot better if you've been in the same industry for the last 2 years. That shows stability, that shows commitment, that shows a good future, right? If you've been in it for 2 years, it's likely that you'll be able to continue in the next 2 years, even if not with the same employer. If something happens, you have that history, you can probably get a job in the same industry anywhere with the skills that you've acquired. A cool thing is that we can use school for work history. So again, we're looking at the last 2 years, but it doesn't all have to be at one job, right? So you could be in the same industry. So you could have been a nurse at this hospital, but now you're a nurse at this hospital. Same industry, you've got 2 years of history. Now let's talk about that same nurse. Even before that, they probably had to go to school. I would like my nurse to have gone to go to school, and I'm sure you would as well. So, and it's a hard job, and there's a lot of education required for it. But you can count that education as work history. So you went to school for the last 4 years, now you've been working as a nurse for a year. You have that history of school, so you're good to go as far as your 2-year requirement for your work history on that loan application. There's 2 different ways that people get paid. You are either W-2 or you are self-employed. So you're either going to get a check from your employer or you're going to write yourself a check as you're self-employed. You'll collect checks straight from your customers or your contractor, right? If you're a contracted worker, you're just going to receive that from the business that has basically hired you for your service or product, whatever the case may be. Now, W-2 income is typically a lot easier to count right away. So looking at that same nurse, if we were looking at maybe somebody who went to school to be an electrician, right? Now they have started their own business. We're going to need 2 complete years of them having that business to count the income, even though they went to school for it. Since they're not a W-2 employee, we still need that 2 years worth of work history when it comes to any self-employed borrower. So it's a little bit more strict on this because taxes are a lot more complicated when it comes to our self-employed borrowers. They can do write-offs. They can really do a lot of different creative things when it comes to the tax returns, and those can show up as losses. So we need a 2-year average to calculate our income of tax returns for our self-employed people. Variable income, anything that varies, right? So if you're a commission or you get bonuses or incentives, anything that's just not consistent on the check. Sometimes per diem, right? If you get paid to travel or things like that. In order to count that income, we need 2 years worth of it to average it out to see how much it is because, well, it's variable. It's not consistent like your W-2. You're typically going to get paid an hourly rate or a salary, so we can know exactly what that is. So that's about variable income, what we need to know. Next, we have child support. So we actually can count this as income. I had a borrower once that had been turned down by multiple lenders. They got to me, they said, hey, this is my last shot. I'm giving up after this, but I've been turned down by multiple lenders. They keep saying it's my debt to income ratio. So I got the loan application, was putting everything together. I got their income that they got from their job, their W-2s, their tax returns. But I noticed on their application that they indicated that they were divorced and that they had kids. So I just asked the question. I said, hey, application looks good. I'm looking at the debt to income ratio. I'm kind of getting what the other lenders were saying. However, I noticed that you have been separated and that there are children involved. Do you receive any other income that we haven't spoken about? So I didn't flat out ask if they got child support, but I did ask a leading question, and they said, yeah, I get child support. I said, okay, well, how much do you get? And so they told me, we talked about it, and actually we got them approved, and they were able to purchase their home. And it's because I asked a little bit more questions and I dug a little bit deeper. So that was pretty cool. I really, basically one of my highlights of my career was to be able to do that for that single parent when nobody else was just asking the right questions. So we can count child support and alimony as income, but there's a few catches with that. So first of all, we are going to need the documentation along with that. So if you were separated, divorced, there's going to be a divorce decree. Within that, there's probably going to be what's called a parenting plan, and we will need to have it called out. This is how much I receive per month. Then we're also going to need bank statements where that is deposited on a regular basis to prove that we are receiving it on a regular basis. The same thing goes for any alimony. Now, on the flip side of that, if you're paying child support or alimony, that's going to be counted as a liability. So we just calculate that with your debt to income ratio, just like credit cards, car loans, student loans, any other debt. We just add it in like a typical debt. Now let's get to another situation we have for our active duty military. So you have what's called your ETS date, right? This is when you are going to separate from service, active duty. I should have looked it up. What does ETS stand for? All my soldiers out there, put that in the comments. Remind me what ETS states. Estimated time of separation, maybe? So we've got our active duty service member that's applying for the home loan, but they are going to separate from service in 12 months. So that's going to be an issue for us. So that date, if it is 12 months from when they close on the home loan, or within 12 months from when they close on that home loan, we need to know what they're going to be doing next. So there's one of two ways that we can address this, right? So if you are intending to re-enlist, that's what we can do. We can just get a letter from our service member saying, I intend to re-enlist. Then we need a letter from the CO stating they are eligible to re-enlist, because believe it or not, you're not always eligible to re-enlist in the military, even if you want to. So that's why we need the letter from the service member and the commanding officer. The other thing that we can do is look at what you're going to be doing next. The military is doing a lot of different things with our service members with skill bridging, and they are basically sending them to school to teach them something and then helping them get into a career basically while they are separating from service, so that there is no break. It's from the military right into a civilian job. If we have that job lined up already, we can use that. But for that, we need to have a lot of detail. So we need to know who the employer is. And from that employer, we need to have the offer letter. It needs to state exactly when you're going to start. It needs to say exactly what you're going to be paid. So it can't just be a general letter that says, yeah, we talked to that person, we like them, we'll probably hire them when they separate from service. It needs to be an actual, not necessarily a contract, but it needs to be something more concrete than just a thumbs up, we're going to hire them. Now we have disability income. So this can be a couple different types, right? So it could be disability income, federal or state, and then it could be also a government, so VA or service-connected disability, but it has to be permanent. It cannot be temporary. So for our VA disability income, this is a service-connected disability. We can count that as qualifying income. It is a lifetime benefit. And actually, at the time that I'm recording this, we can gross it up 25%. So let's look at an example here. If your VA disability award was $4,400 a month, we can gross that up by 25%. So you take $4,400, you multiply it by 1.25, and that's going to give you $5,500, right? Now, the reason we do that is because it's non-taxable. So basically, we can look at it as if it were taxed, just like a W-2 job, right? And that's why we can gross that up. So other things, they are liable for taxes like Social Security, things like that are able to be, some of it's taxable basically. So that's why we can't gross up other things. So then we also have retirement pay, right? So you work for a job for a long time, they pay you a retirement or a pension. We can use that. We just need the monthly statement that shows how much you get. We can get distributions from an IRA, your retirement accounts, 401k, Roth IRA, all those things we can use as qualifying income. Depending on, the situation, obviously you're going to need to be of age for those distributions, right? So you have to be able to be taking those distributions. In some cases, we'll take the statement, we'll look at it, and based off current age and how much you're taking per month, we'll have a calculation on how much you can use for that. So anything else you receive on a regular basis. So you go back, you think about it, look at your situation, always talk about anything that you receive on a regular basis. We might be able to use it as qualifying income, maybe not, but at least always be thinking about it when you're talking to a loan officer. And then of course, just Social Security, right? So just your standard Social Security income that you receive. Once you're retired, we can count that as qualifying income. We just need the benefit letter for that. And most likely for all of these, of course, we're going to want the bank statement to prove that it is coming to you on a regular basis and that you have access to it. So there you go. That's kind of the skinny on what we're looking at and what you should be thinking about when looking at income and work history. 2 is the magic number. 2 years on the job in the same industry, 2 years owning your own self-employed business. That's the same with 1099s. A lot of people are doing these types of jobs, right? Driving for certain companies. So that's self-employed. You get 1099. You're not actually an employee of that company. So we're going to need 2 years of history on that. And then finally, I guess the last thing would be if you have a primary job and then you have a part-time job, or however you want to say that, you've got your full-time job, you got your side gig, you got your side hustle. We can count the full-time gig depending on the circumstance that I talked about earlier. We can start counting that. But any side hustle that you started or side gig, part-time job, we need 2 years of history on that, even if it falls in the same industry. Okay, so if you are working as a CPA, now I don't know if this is legal, so don't hold me to this example, but right, you're doing taxes, you're a CPA, you work for a company, and then you started your own side gig where you're doing it for friends and family outside of work. You need 2 years of that because it needs to show that not only are you doing it, you have history of doing it and that you can continue to do the 2 jobs, right? Can you actually keep the full-time job and the side gig at the same time? So we need 2 years of any part-time job to show that for qualifying income. So there you go. Hopefully that answers some questions for you. Maybe it answered questions that you didn't even know you had. Again, my name is Drew Smith. I'm a licensed loan officer, NMLS number 2113580. I'm always up and available for a conversation. I'd be happy to chat with you about your certain situation. Please feel free to reach out to me and like and follow for more mortgage tips.